Hello, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This week, get everything you need to know in 90 seconds at 9 o'clock with news investors are running for the hills. Fear is gripping the market today, and it is a fear that world trade is under threat. Wall Street is down sharply, gold is up sharply, investors are piling into benchmark bonds, and rate inversions are larger. The first signal started on the NZX yesterday, which was down 1.8%, and the ASX 200 fell even harder, down 2.3%. Key Asian markets took the cue, with Hong Kong down 1.8% and Shanghai was down 0.3% despite home team support. Tokyo was closed, so expect a very sharp drop when it reopens today. Then the Europeans took a bath, with most markets down 4% overnight. Wall Street can't ignore the signals. In midday trade is down a massive 100 points, or 3.6%, a move that wipes out all of February's gains. On that basis, it's not critical, but it is a fearsome signal all the same. It is a market sentiment shift not supported by some domestic American data. The Chicago Fed's National Activity Index for January improved from December, even if it was still quite negative. And the Chicago Fed's Regional Factory Survey for February is also somewhat positive. North of the border, Canadian wholesale trade in December also showed a modest improvement. Across the Atlantic, the IFO Sentiment Survey also reported a pickup in sentiment for February. But it's hard to see these levels being sustained if world trade falls further. In China, the drive to restart the economy is coming with rising fear. Putting large workforces back to work early risks mass reinfection, and there is evidence this may be happening in steel mills in Wuhan. The latest compilation of COVID-19 data is out. There are now 2,200 cases or more outside China. A week ago, that number was 756, so it's trebled in 1 week. China may be getting on top of the situation its leader calls grim, but outbreaks elsewhere, especially now in South Korea and Iran, are unsettling. The fear of a pandemic is much greater than a one-country epidemic. One reason for the sell-off today is that investors are becoming increasingly nervous about the ability of central banks to protect them from the economic impacts of a pandemic virus. It'll be up to governments to come up with targeted fiscal policies now, and these could well have bigger-than-neighbour aspects in a rush to do something. The recent tariff war showed how easily politicians succumb to this sort of cheap policy making. US Treasury 10-year yield is sharply lower today, now just on 1.36% and lower by another 11 basis points overnight. Gold has had another sharp rise today, up $30 to $1,673 an ounce. The yellow metal is up now more than 10% since the start of the year. And US oil prices are also sharply lower overnight at just on $50.50 a barrel, and that's a $3 a barrel drop. The Brent benchmark is also lower at just under $55.50 a barrel. It is all driven by demand fears. However, the Kiwi dollar will start today unchanged at 63.5 US cents, cementing in last week's fall. On the cross rates, we're up slightly to 96 Australian cents. Against the euro, we're also unchanged at 58.5 euro cents. That means our trade-weighted index is still at 69.5. I'm David Chaston. That was 90 at 9, brought to you by interest.co.nz.